Yeah, we are, and we look at our process and our philosophy, and we don't think of emerging markets as a contiguous asset class in the sense that what happens in India isn't the same as Brazil or South Africa, and so we tend to invest in emerging market companies themselves when we can find that convergence of quality and price, I would say. And so certainly over the last 6 to 8 months, as the Fed has begun to raise rates in the US and as China started to devalue by 2%, although that stabilized, as people became worried that the last place you want to be is in emerging markets. But if you take a step back, Japan's not growing, Europe's not growing, the US grew at 0.5% in the first quarter, right? If you want growth, even from a company or a country perspective, you still need some exposure to emerging markets. And what we found in the back half of last year is a great opportunity to continue to allocate more capital to businesses that had been that had gotten very cheap because of these macro concerns. And as you rightly said, some of those have bounced back quite aggressively here in the last 3, 4, 5 weeks. Again, the perceived safety right now of high quality businesses in developed markets, if you pay higher and higher multiples, it's hard to get double-digit returns there. You have to go off the beaten path. You have to get involved where price is your friend, and we've been able to find that in emerging market companies right now. Yeah, we continue to really like Indonesia and India. These are young populations. They're still growing 5, 6, 7% a year in some cases. A lot of opportunity to restructure the economies. There's great consumer growth dynamics. Oil has been a big beneficiary to India as a net importer. So we continue to see the current account deficits are fine in these countries. This isn't 1997 all over again. Places like Brazil have really struggled with impeachment, a commodity sell-off, Petrobras scandal. However, if I were to ask you what the best performing market in the world is of any big market year to date, it's Brazil. So again, to get return, the headlines catch a lot of the news, but when you get to the company by company specifics, a lot of these companies are being priced as if they're never going to recover again, or we're going back to a point in time that's very different to where we are today. And so it's up to us to be able to sift through that news, which is hard to do at times, go against the grain and stick to the valuations, which is what's led us for the last 20 years. Yeah, it's a great question. And I think in 20 years that I've been investing, they've always said it'll narrow the discount. I've never seen it. So there's too much political risk. There's too much currency challenges for me to ever see it closing completely with the US, for example, or Japan. But certainly the growth dynamics would support higher multiples than what we're seeing today.